Hey folks, welcome to Tuesday, the 16th of November 2021. Um, Kind of a quiet day yesterday on the markets. Not too much to really speak about in terms of equities. I mean, well, that might be a little bit unfair. There was a really good move to be shorting on the Dow, actually. Um, the euro, by far the best trade for me yesterday, and still going lower on that rising dollar. Today we have in 15 minutes coming out of the eurozone. We have the employment change quarter on quarter, year on year, and GDP year on year, quarter on quarter. So some big data for the eurozone coming out. Then in the afternoon, 1:30, we're going to get US core retail sales. And then we're going to get retail sales, year on year, month on month. And then at 2:15, we'll get some industrial production year on year and month data. So definitely some market moving data. I think equities are, they're pretty much unstoppable on these highs. But a little bit of a pullback seen there last week. So let's get over, have a look at these charts, and you can see on the top here on the euro, if we see the weekly bars here, a little bit of a gap overnight. I don't want to actually change these times right now, but that gap, don't worry about that. But we are destination 130.50s, and that's certainly my position. The departure, this short on the around the 14.9 or 695s down to here. Nice little swing to be had. I'm thinking about potentially re-adding to this on the data coming out in about 15 minutes. Of course, this is pushed by the dollar rising on that inflation, on those inflation readings that we had last week. And of course, here we are. So it's actually been quite some time since we've been above this upwards trend here. Really going back to what is 2011, April 2011. The second point is May 2014. And so, as you can see here, the last time we were up here was it was a year ago. Actually, it was a year ago, almost to the day, that we were above. And you can see now the 94.63s coming in as that good support. To show you that here, 94.63s, up we go. No retest on it, and we're now looking to test. You can see just on the left of your screen at the low of the week of the 18th of May 2019. So 95.753 on the upside target, and really we can be long the euro until that happens, I think, in my estimation. So that's what we have on the Dixie oil yesterday, coming into sort of a lot of weakness, really. I think the threat of a release from the SPR, Strategic Petroleum Reserve in the US, does loom heavy on the oil market. There's also a little bit of lockdowns being reintroduced in Asia. However, to counteract that, we do have flights back. Travel has come back quite a bit, and so I think it's a sort of a delicate balance now at the moment as to what is kind of stalling the ball for oil. Trading the 20 EMA right now, 81.26 at market. I do believe in higher prices. However, if we do go into a fourth wave, major global wave, and we get those resulting lockdowns, it's going to be extremely hard not to see the authorities in, say, Asia, for example, not kind of come off on their oil demand levels, really. So, I think the SPR weighs heavy, and the potential of further lockdowns also weighs heavy on a global scale for oil. On the nat gas picture, we have Russia now putting more gas through, or some gas back through to Europe. Nord Stream 2 is still upheld, but just to give you a little bit of color on the energy picture, been having a little bit of scalpy fun on nat gas yesterday and a little bit last week. So Um, but yeah, for oil, look, what's the trade, Tim? Well, 79.81s is holding its head there, yeah, holding up oil yesterday on the bottom, as you can see on the daily chart on the top of your screen, and then the mid bottom of your screen. I'll just let me make the 60 minutes a bit bigger. You see that there is this area below, right, and this is a gap area going back as far as the what is this, the 7th of October. Um, when this gap really opened up, yeah, it was the top of this gap was beautiful support in the fourth, 6 p.m. on the 4th of November, right? And now yesterday I was sort of the mind I was shorting in this whole area here, um, really of the mind that we would break. Well, we were looking to break down, but once we broke down, we would actually break through, close the gap, and then it would be I remain neutral on what could or couldn't happen in the picture right now for oil. But now it's actually it's from this bid that we've seen late yesterday and overnight into the R1. I think this is showing me that, well, you know what, maybe a revisit on the 79.21s. I don't think that's as likely as higher prices right now. So I think probably potentially auction within this area. I'm not too fussed about trading oil right now, to be honest. It's a little bit of a mixed bag for me. So yeah, look, I mean, 78.26. I would be wary of taking longs here, given that I think this gap has to close down to the S3 today. And I think inevitably a push up to probably like the 84.16s here. Well, that was a bit of a line in the sand there. But I think if we do push on up here, I certainly wouldn't be shorting oil under those type of conditions, because you really would just be fading the trend on the day if you were to be doing that, and that's not really the best way to make your money all the time. You want to be going with it. Now you're seeing the DAX, as I'm speaking, pushing into the high on day. These are new all-time highs for the DAX. But as this is the US session, I'm going to switch over now. Target on the DAX 16,252s and a trend channel high up at the 16,340s. Then I don't really want to be looking for any more longs in DAX at that time. Should we push on up here either in today's session or tomorrow's? I think that's going to be, if you look out on the greater picture of this channel that we have here on the DAX, kind of going back to 2018, October 2018, and December 2018, is upward trend channel. So that, I think, should we push up to that 16,430s or thereabouts, I think there's a bit of selling to be done there and kind of bring us back down into earth a bit. So yeah, just gonna but currently on the longs in DAX from lovely action yesterday. Moving across to the US equity picture now, and let me kind of get up the daily bars on the Nasdaq, and this is it. 16,000 yesterday. This was actually let's see, that was Friday. Yeah, so Friday, you can see here the pull back onto the 16,000 handle. Beautiful, lovely, lovely, lovely long to be had there. Big old doji. I think it's quite hard to call this one right now, but I would be on board with higher prices rather than lower prices this week. I don't really know what sort of fundamental catalyst is going to come in and pull us down off the highs. Could be some earnings, could be further selling pressure in Tesla. But Tesla is really the 2.6 weighting in the Nasdaq, of the SPOOs. So really looking over on the SPOOs here, you can see the daily charts there on the right of screen. The 20 EMA does loom quite heavily below here. This does look like a pattern of high pullback, attempts to go higher, and now the start of another pullback. So actually looking at this SPOOs chart, I would be sort of the mind for lower prices. I think you get a break on that little interim low yesterday there at about 46.67s. Little break on that should run further down lower into some interesting prices for the shorts. Probably S2, S3 would be certainly within sights. Nice little zone here of support yesterday as well, or sorry, from last week as well, last Friday. So, could be more support should we push down. Um, I think it's very hard. Even speaking with the elite team, it's very hard. Getting those big, running trades up at these highs. It's really sticky stuff, and in a lot of ways there are easier ways to make money trading than trying to pick the highs and lows on these all time high days. As we're right in there, but all time high above 4711.75 for the SPOOs. I think it would be fitting that we would sell down a little bit to pick up more buyers, and then later in the week we make a push for the highs. But at the moment, with this data coming out, this positive data is going to be positive for stocks. So, do be mindful of that, whatever the data has been since, or throughout the afternoon. The Dow, lovely pattern here on the Dow. You see this bear flag that we had last Wednesday, all right, coming on to a mildly significant level, 35.97's the high. Just taking my head off the screen, the high here from about 4:30 on the 2nd of November. A bit of a line in the sand you can see here. And really, anyway, the bear flag presenting itself. We had this on the screens. We were able to trade this short, and getting out of that. Now we pull back yesterday to that flag, and then of course sold down the entire rest of the day. So 8 a.m. bid up in Europe. Comes into the open, and 1 o'clock marker, 2:30 marker here, and we just simply sell back down onto the 35.971s. So I think this market could make another attempt on the bear flag. Certainly seen that happen before, but for me, I think on the Dow, I would actually, equities are quite big now, so we get that positive data out of the core retail sales and retail sales. I think we are going to be coming back up, test on around here in the R2, and then it's probably all to play for whether we go higher or turn back down again. I would be of the mind that we get positive data, we push to here, and then we can kind of pull back down to the 20 EMA probably over the course of this week. So yeah, nice trading to be had on the Dow there. Very, very, very technical on that bear flag return. Dollar, let's see, the dollar. Yeah, I've talked about the dollar. Gold, gold. I mean, it's probably shaping up now to not be the worst trade of 2021, because it certainly has been for quite some time. So, look, we have that target, that's 1870.8 here, on the weekly bars. That's done. And then if we zoom in on the 60-minute bar chart, you can see that 1870.8 has been claimed now to act as support. This is the first hourly close above that level, probably for 6 months. I'd hazard a guess, actually, if we go back to our weekly, all the way back to June. All right, 5 months. Okay, fair enough. All right, so look, I think we can run on. Now, the big thing about this trade is that, really significant resistance above here. You could take the open on this week here, 1884.6, but that really wouldn't be. I mean, look, you can scale something out there, but actually the target for me on a push here up is going to be 1924.1. Big, big, big trade here. All right, big trade to be gotten here. It's just a risk reward picture. 32 ticks of risk off of the 1870s level. You're getting about a 16-1, and that is actually that's about $5,000 per single contract traded. So a nice little swing to be had there, folks. Should you be of the mind that we get maybe poor data coming out, and gold on the up, but gold is very tricky these days. Really, really is tricky. So, one member of the elite team only trading gold, doing quite well over the last couple of months. So, congratulations to him. All right, that is it for me for today's session. Please do click and subscribe in YouTube. And for the pro traders, I will be back with you for 1 o'clock for more fireworks. Actually, I'll be staying with you through this 10 a.m. Eurozone data. And otherwise, I will check you later, boys and girls. Take care. Bye.